China has reported a smaller than estimated trade surplus in May as imports surged and export growth slowed. The world's second biggest economy recorded a surplus of $13.1 billion last month. That's more than the previous month, but still some way off from the $19.3 billion that economists had been expecting. Imports climbed 28% from a year earlier, while exports rose 19%. Let's get more on those figures now with the head of China economic research at UBS Securities, Wang Tao, joins us now from Beijing. So, Tao, do tell me why this estimate, this trade surplus figure came in so far below consensus estimates.
I think the key is that actually imports came in stronger than most people expected. Our forecast was export growing at 20% and imports at 25%. In the end, the import actually came in more than 28%. Exports was in line with people's expectation. That is softening a little bit. So that actually shows that China's domestic demand is not as weak as most people feared.
Okay, and what about exports? Because 19% is still pretty high. Is that going to be sustainable given that advanced economies have hit this soft patch?
We certainly don't expect that to be sustained. We have been tracking the export number over the last few months, and on a month-on-month, seasonally adjusted basis, the momentum has slowed. And this is in line with what's going on in the U.S. and Europe. Basically, in the global economy, we are seeing a slowdown. So for the year, for the rest of the year, we do expect exports growth to continue to come down. And so that's very much in line with everybody's expectation. But the imports number, especially in May, we see oil, iron ore, soybean, but also very importantly, the imports of automobiles and machine tools have all rebounded. That's partly an indication that China's domestic demand is still there, partly because I think the disruption of the supply chain related to the Japanese earthquake is getting back.
What does it all mean in terms of China's relationship with the rest of the world? Can China really pull the rest of the global economy along, or does China start to struggle and really slow when in the event of a more serious slowdown in the developed world?
Well, I think if the rest of the world, especially the developed economies, see a serious slowdown, obviously China alone cannot sustain global growth, and China will be affected in its export. But right now, I think both China and developed economies are seeing some slowdown, so that's why people are very worried. We think that China's slowdown is moderate, is not going to be very deep or last very long. Part of that is just a normalization of growth, and part of that is destocking. And so the trade number, I think, is consistent with our belief.
Very quickly, just tell us what this means in terms of when the central bank will start to ease off of its tightening cycle. When do you expect inflation to peak? John Lipsky, for example, saying at the end of the year it'll be about 4%.
Well, that's also our forecast. We see inflation to peak in mid-year, probably June. It's still mainly driven by the food cycle. And later in the year, especially as we expected, if food production stays normal, then we will see food price inflation coming down, and we see inflation at 4%. For the central bank, we still expect a couple of rate hikes in mid-year, but what's more importantly is the credit, the amount of credit the central bank will allow to go into the economy. On a flow basis, we think in the second half, credit will actually be more relaxed, not as tight as in the first quarter.
All right. Thanks very much, Wang Tao there of UBS.